Hello, buenos dias. That's my Spanish. So I think I have about 30 minutes to speak on digital insurance, which is a challenge. Usually I start with focusing on the customer expectation and changing behaviors of customers. To make it, let's say, lively and short and wake us up, I was thinking that maybe we could ask this from a new distributor in insurance company you will all recognize, and maybe if you can run the video to better understand what customer experience mean in a phygital world. Hopefully this will start.
You know, once in a while, something comes along that changes the way we live. A device so simple and intuitive, using it feels almost familiar. Introducing the 2015 IKEA catalog. It's not a digital book or an e-book. It's a book. The first thing to note is no cables, not even a power cable. The 2015 IKEA catalog comes fully charged, and the battery life is eternal. The interface is 7.5 by 8 inches, but can expand to 15 by 8 inches. The navigation is based on tactile touch technology, which you can actually feel. Content comes pre-installed via 328 high-definition pages of inspiring and furnishing ideas. To start browsing, simply touch and drag. Right to left to move forwards, left to right to move backwards. Notice something else? That's right, no lag. Each crystal clear page loads instantaneously, no matter how fast you scroll. If you want to get a quick overview, just hold it in the palm of your hand and using just your thumb, speed browse the content. If you find something you want to save for later, you can simply bookmark it. And even if you close the application, you can easily find the bookmark again. Amazing.
So I like this video because it obviously touches many of the points we have to take care of within the insurance market. So this was the customer side, if you wish. So I will now move to the results of a survey we just completed. It's actually not published. It's the first, let's say, official broad presentation of the results of this survey. So if you could just move one page. This is a survey we did in the, let's say, just before summer across Europe and North America. We have 107 insurers in Europe actually responding, which is very high. We met almost 80 of these insurers face-to-face in Spain and many other markets, and the rest was done through phone interviews. So it's quite, I think, quite representative, let's say, of the larger insurers. I don't know if we can, yeah, I have this, yeah, that's it. I won't go into all the details, but basically you see you have insurers across Europe, really, as well as the Americas, a little bit of Japan. All distribution models, all lines of business, actually many of the P&C actually composite insurers. And you see the distribution of size, so it's not really the smaller companies, it's companies of around $1 billion premium in dollars and above. So that's for the details. More interesting is to see highlights of the results. So the first thing, which is very interesting, is, I mean, obviously the people we interviewed were CMOs or CDOs or CIOs, depending on the setup in the insurance companies, who runs the show or driving the digital transformation. And you see there was a question, what would you think is the span of the transformation? And over 5 years, it's obvious 98% of the respondents, it's not 100%, this is not old style USSR, but almost 98% say it will be a transformation of the insurance value chain. So this is big. This is big, maybe not immediate, this is 5 years. And of course we have the further detail when 1 year and 3 years. What's also very interesting is that 84% of the respondents think this will be driven by customer expectation, as you would think, as well as new technologies, no surprise. actually 83%, just the same percentage of insurers say this will transform the way they will interact with their customers. So this is why I started with the customer view, a shortened version, and also, of course, change the use of channels. And you can refer to our various customer surveys. This is very, very obvious in the way they're moving towards a multi-channel type of wish of a relationship. Very interestingly, we also had a question, where do you think the challenge will come? And actually, you see that, yes, 59% believe they will be challenged by online service providers, but you also see that 62% think it will be coming from insurance companies. So you see all the details, of course, aggregators, price comparison come high, but banks are, which you already know very well in Spain as a big player, also come high. So yeah, certainly some thinking about threats, and certainly also sizable percentage see threat in terms of margins. So we'll come back to that in terms of value creation, but almost 40% of the sample actually think there will be a threat and potential risk on the margin, which is obviously something to weigh in, and we'll go into more depth into that. So overall, it comes very clearly that this is known to insurance companies. This is not new. Now the question is, what are the implications? So we had quite a few questions around value creation. Basically, two sides. What would be the impact on revenue growth? What would be the impact on combined ratio and margins? So this is focusing on the growth side or the revenue side. And it's very interesting to see that both in life and P&C, the respondents actually think their digital strategy will help them grow revenue. So you see the expected growth coming out of their digital strategy, 5 to 7%, depending on life or P&C, which is sizable in a very increasingly stable markets, particularly on the P&C side. It's also interesting to see that we had a question, where do you think will be the largest players taking market share? Who will take market share? And so there was new entrants from other industries, let's say the Googles of this world, new entrants from other countries, or innovative players. And that's very interesting to see that you have the detail on the right-hand side, is that insurers on average think that the ones who will grab the most market share will be the innovators. Very interesting to see. Even 24% actually think they will grab more than 10% market shares, which is just incredibly big. I'm not sure that's completely relevant, but just gives you a sense of the thinking. This is very impressive. Also very interesting, we had questions, you'll see that in more detail when we release the survey details, around what would be the share of your premium income coming from connected insurance. So I've just taken up the connected car offerings, and the way the question was shaped was, what would be the percentage of your premium revenues coming from connected insurance in 3 years, which is very soon. And the average is around 6%. So coming from some countries already 3-4%, particularly Italy, almost the same for UK, but 6% across Europe, this would be big, particularly if you consider what share of new business would be coming from that. So this is, of course, a survey. This is not a fact, but it's interesting in terms of the way insurers think. This is coming. This is not something that will not arrive. Also, 29% of the respondents actually think their digital strategy will help them address and grow grow their customer base to address new customer segments they're not addressing well at the moment. So overall, quite a healthy story about growth and revenue growth driven by digital innovation. Also very interesting, we had quite a few questions around what are the implications in terms of value chain, what are the implications in terms of expanding the scope of your offerings, and you have the highlights on this slide. It's very clear that increasingly insurers actually associate digital strategy and expanded value chain in many dimensions. So very striking, 82% of insurers actually look for investments or acquisitions to better position themselves in the digital world. 82%, this is really big. And you have the details on the right-hand side of what actually those acquisitions would be. So of course, insurance startups, telematics-related companies, aggregators, analytics companies, home technology, everything. So basically, connecting with new players or players that are would be part of a broader ecosystem to help position and create new offerings. And this is confirmed by other, let's say, points of or results of the survey. So 43% of the respondents actually are planning to acquire or invest into startups or innovative players. Quite a big, if you think of the investment strategy of most insurers, 43%, it's 43% of 100, so it's quite significant, even though that might be not a big share of the investment of an insurance company. So a very interesting new strategic approach. Distribution partnership is not new, but there is clearly a continued and renewed interest in broadening distribution agreements. This was the video from IKEA. You were over that IKEA just started distributing insurance in the Nordics just a few weeks ago, and this will continue. Not all approaches will work, but many actually do work very well, and there's a renewed interest in that. And increasingly also, insurers will look at expanding their traditional insurance offering with something else. Something that will be convenient, something that will provide a service, something that will be attractive and potentially generate additional revenue streams. So you see the span of the various ideas, and there are quite a few around, and quite a few actually not only thought of, but actually started to be implemented. So of course, lots of location-based offerings. You know, this is becoming very big in retail distribution. I think this will be very big in insurance distribution as well. And this is actually what insurers think. I even saw last week the CEO of AXA in France tweeted on geofencing. So this is you know, being part of the thinking of many players. Of course, other financial products, not new, but opening the supply chain to customers. So think you're buying so many things as part of your claims operation. We're beginning to see players, see that in the Nordic, Trig is doing that very well, to open their sort of claims warehouse, so to speak, to their final customers to just, you can benefit from our buying power. Very interesting opportunity. And you can continue all the lists, motoring needs, of course, expanding this into broadening the offer in motor, lifestyle-based services, so concierge and many other options. Loyalty rewards, also something becoming big. You know, you all know that retention is a key issue, and loyalty may be a way to improve loyalty programs, may be a way to improve retention. So, summary of this page. Really think of expanding your value chain, of looking at how you could broaden the service, broaden the customer experience, particularly in a connected world, to provide more value to customers. And this is, I think, quite new. We were actually surprised by the level of interest and intent to invest into startups or to invest into other companies or to broaden the product offering. I think this is here to stay. But of course, when you go deeper, what will you do? So it's very clear, we understand, everybody agrees that there will be a big transformation in 5 years, but what do you do now? And there, I think that it's a more mixed picture, because you see that only 47% of insurers actually have a digital strategy covering the whole value chain, not just the distribution, whole value chain. A year and a half ago, we did a survey with the same question, it was 40%. So it's not changing so much, and there's still a lot of work to do to really define a broad-based digital strategy, which we think is essential. 60% of the respondents actually say, yeah, we have digital investments, we're doing things, but it's exploratory, it's not transformational. We're just testing, we're trying, not looking for transformation. And actually, yes, 64% of respondents see their main strategic focus in digital to actually enable or digitally enable their traditional channels, which is a key priority, of course. I mean, it's very clear that if you don't change the way the current distribution channels, the broker market, the broker channel or the agent channel in Spain, to work with the digital customers, there is a risk of, you know, having the targeted customer base actually reduced, and we see that very clearly in the US and in other markets, where staying too long in a very B2B2C model, no digital, actually generates decreased market share. So very obvious. And the focus at the moment is also in decreasing costs, digitizing existing processes as much as possible. No big differences between life and P&C. A little bit more focus on process digitalization in life, but almost the same in P&C. What's very, very strange, and I think really a question for all of us, the consultants and the insurers, is that only 25% of the respondents have implemented a single view of the customer, which is absolutely key as a base first step. If you want to be digital, you have to know your customer and show your customers you know them. But if you don't have a full view, that's really a challenge. And this is, I think, let's say, the key ingredient and first step, and actually increasingly easy to implement step to really create this, this view. So, of course, many others, actually 35% of the sample, are working to create this customer-centric view, but this is a really, really big difference with other industries, if you think of it. Bankers are much more advanced in that single customer view. And you name all the industries. I think this is absolutely critical. This is really a call for action. And it seems that although, if you think of it, 98% say in 5 years there will be a transformation, 25% actually have a customer view. Big, big, big gap. And I think this is probably the top priority action, if you wish. What also very interesting is that we had very different answers and different, let's say, segmentation of the sample. So we looked at the more or less 25% of the respondents which actually said our strategy is to transform. So we looked at, yeah, they say they transform. What are they doing different, or what do they plan to do different? So all those figures are what the transformers, so to speak, we call them digital front runners, are actually looking at or are doing. So, of course, starting with the digital strategy, 73% of them versus the more or less 42% of the sample who don't, or the others who don't have it, have a full, clearly defined digital strategy. Of course, a big difference. Also, a very big difference in customer centricity and customer view. This is, let's say, they have or are almost there into customer-centric view. Big difference with the rest of the sample. They're also more acquisitive or looking more into investing into innovative startups and companies. As you see the difference, 62 versus 39 for the rest of the sample, quite a big gap. They're also more looking into new partnerships, 54 versus 31%. Very clearly also, we had a questions of how would you think your digital strategy will help you differentiate in the market? And their answer is quite often to personalize products and services, provide something that is really a benefit and a differentiation to customers. If you look at our customer surveys, this is actually the main expectation insurers, clients have, which are not filled by insurance company at this point. And we think that this is a major differentiator. If you're able to differentiate, personalize your customer experience, it makes a whole lot of a difference in terms of cross-sell, retention, and all the others. And even more striking, they are 3 times more likely to already engage their customers through social media. And if you look at surveys across industries and our own surveys in insurance, it's very clear that the 0 moment of truth, the first time you get in touch with the product, the company, is increasingly through some sort of digital channel, and increasingly, particularly for the younger generations, through social media. So being there at this 0 moment of truth is a big, big, big difference. And these are, I mean, there are other dimensions, but I chose them on purpose. They're quite different, if you wish, in terms of what they're doing or planning versus the rest of the sample. The other dimension, which is quite different, is the view on value generation. So you remember we had a questions of revenue growth. This is focused on the impact on margins and combined ratio. So the investment level is more or less the same. This is for P&C insurance. Average of the sample is in the region of 46 million. So they invest a bit more, but let's say they're a bit larger in average. So it's not a big difference. The big difference is in the impact on premium growth and the impact on combined ratio and margins. So basically, they expect double growth from the rest of the sample in revenue generated by the digital initiatives, 8% versus 4%, quite simple. And more importantly, they actually expect double the improvement in their combined ratio, 2.3 versus 1.2. If you count, that's a big money. And actually, I think this is probably a key characteristic of having a digital strategy defined. You know where you will get value. You have planned to it. You've looked into it. And there are many, many levers that you can combine to generate value through digital transformation. I would say the digital front runners have done at least part of their homeworks. They have a view where they would generate value. Actually, we think that they probably should continue to work on. We've been working with many clients on digital transformation. This is a view. We recently published something on this, on where we think value can be generated through digital transformation. And we actually have it in different shapes for different countries. So this is the French figures. We have the Spanish figures. My colleague Carlos has this for you. But it's quite similar. The only major differences between UK and the other European countries, the UK levels are quite different because of the different distribution style and the importance of digital channels. And if you look at this, look at the big figures at the bottom. Develop loyalty and retention, 6.5% potential impact on profitability. This is really big. Increasing cross-channel transformation. This is big. You have an increasing level of digital codes that agents, traditional distribution channels are not good at transforming, and there are differences of more than 6 or 7 times between the low performance and the high performance. If you call, let's say within the hour, you might transform 30-35% of your digital codes. If you wait to 24 hours, it's just miserable 5%. So there's a big difference, and big differences can be made. But of course, cross-selling, upselling is key. And you see at the bottom, reduce cost, all the theme around digitizing processes, around self-service. So there are plenty of opportunities to create value. And I think even the front runners are probably understating the potential impact. And of course, you might argue that this will only offset part of the negative impact of, let's say, price transparency for some markets. Yes, that's true. But the levers are so big that there is a fantastic potential to create value. So this was, let's say, the highlights of this survey. This will be published early December, I think, officially. But of course, if you're really interested, we can go in more detail with you, particularly with the companies, and I think that many of you actually were involved in this survey in Spain. We'll get a first, let's say, view of the detailed results. So I also wanted to maybe give a hint of what we think, or what we see, actually, what we see being very innovative in the market. So I've taken out some of the, some innovative examples that come out from the EFMA Innovation Awards. This was done in Barcelona, I think, 2 weeks ago. This is something co-sponsored by EFMA and Accenture. There were more than, I think, close to 300 companies submitting cases, more than 500 cases. So the winners have been strictly selected. And I chose one company. mBank is a Polish bank. It's not a very large bank. It's not a dominant bank, but they have actually won 2 prizes. And the first prize they won is for something that is called mDeal. And mDeal is a fantastic expansion of the value chain. They have negotiated agreements with retailers to provide, let's say, reward loyalty programs to their clients. And they have signed up more than 600,000 clients in a very short period of time. And this is generating fantastic value to clients. Let's say the return fee, this is actually returned to the customer bank account directly, is in the region for average client 100 to 150 euro per year. So do you think of that? I mean, what you pay, basically all the bank fees are paid by this program. This is very impressive. And it's very much a play, and I can't go into too much detail, of course, but you can look at the EFMA site to have more information, or we can provide it. I think this is a prime example of what you can do by broadening your value chain, expanding into other services, finding, let's say, interesting value deals with partners, and actually this generates either revenues, additional revenue for you, or value for your customers. And both sides, it works well for you as a company. And the nice thing about this is that discounts are automatically sent to the client bank account, so sort of immediate money back, which is absolutely fantastic, and of course, clients love it. The other one I've chosen, it's a little bit provocative. I've chosen bank ones. I will go to insurance in a minute. 30-second loan. This is, I mean, this is crazy. Well, how do they do 30-second loan? What they do is actually they have very, very strong analytics behind it. So let's say any application is in fact pre-authorized. You need very few additional data. In insurance terms would be fast code, if you wish, to actually complete the submission and have approval or not approval. But you have a much more detailed view of your customers. You sort of already screened it. You know what's the value, what's the risk. You ask a couple more information, you're done. If you think of it in insurance, this is the fast code theme. We see that Allianz doing that in France and Italy, and increasingly, I think Caixa is doing that in Spain with for banks. Increasingly, we'll see social media data being used with the approval of the client, of course, to actually reduce the code effort and come to very fast code. So I think the combination of social media data and analytics can provide fantastic change in process efficiency. And you can think of all the value chain, you can have this sort of impacts, hard work, some work, but fantastic impact in terms of cycle time and value for clients. Another winner at the EFMA award was a company called Inshared. It's actually created mostly by a company called Achmea. This is a Dutch company. Achmea is the leading Dutch insurer by far. And you're probably aware that the Dutch market has been profoundly transformed by a new regulation introduced in January 2013, the equivalent of IMD2 that was discussed. It's already in place in the Netherlands, already in place in the UK. And in the Netherlands, this has completely changed the distribution landscape. And there is a few, but very, very interesting, almost fully digital companies, quite successful. Inshared is one, Intrasure is another one, and they won because they had just a fantastic claims experience across all dimensions. So they have already 50% of their claims done fully digitally, straight through processing. So this is not magic, this is not something that cannot be achieved, this is already there. And we have discussions with many clients, what should be our expectation, our goal in terms of claims digitalization and straight-through processing. You have the answer, it's certainly above 50%. And this is very, very nice, and I think there were other winners were very interesting. Another one which I haven't put in there is State Farm. They introduced a new app for a claims app. You take a photo of the car plate, and you have all the car detail just populated immediately. And this is really fantastic because you know, there is work within Europe on the claims of first notice of loss for car, which is a little bit tedious. It's just like transforming the paperwork into an app. There are radical new ways to doing it, much more efficient. So same data, but let's say processed a little bit different. I think we'll see a lot of that in the coming years. Another innovation I took, and I'm sorry, I have to behave a little bit on the timing, is a company we're working with for many years, a very special company. USA is actually a mutual company for the US military personnel. So they operate across the world because their clients are across the world, if you wish. And they have a fantastic customer-centric approach across all dimensions, one of which is usage of intensive usage of social media to interact with their customers, not only for claims, not only for codes, but they created sub-communities. So you have the community of spouses, you have the communities of football players, you have the community of whatever. So they have quite a few communities which are actively interacting between themselves, between the company and themselves, which creates what all insurers are actually craving for, which is more customer interaction. And this is very low cost. It's also very low cost in terms of processing, because they also use social media to initiate some processes, particularly on the claim side, which is on average very efficient also for servicing. But the heart of it is creating intimacy with their clients and intimacy between their clients. And I think particularly for mutual companies, this is something that can be replicated, adapted of course, but replicated with a lot of value generation potential. So it's not waiting for the customer to show up, it's creating the intimacy first place. And if you think of the combination of connected insurance with this sort of social media enablement and a mobile tool, which of course, I mean, Facebook and all the others is fully mobile, this is the way to become closer to a lifestyle partner, being the friend always on of your customers. And I think, this last one, probably I don't have time, but this is for you to look at. This is a fantastic case of working with your clients to help some of your other clients to become digital savvy. So this is targeted towards the elder generation. They have created a group that they call the digital eagles within their clients, helping other clients, and this is also creating a sense of community, creating interaction, creating intimacy, and actually providing real value to the elderly population. This is no big IT investment. It's all people related, and it provides a lot of value. And this was also one of the winners at the EFMA Awards. So with that, I think I have to close. Maybe we'll have time afterwards for questions. Anyway, I will be around, so if you have questions, do not hesitate.